Before we even talk about food tech, let's acknowledge the elephant in the room, which is the economy. And I think we live in a Darwinian time in the history of our human economy. The next 5 years are going to redefine many aspects of our economy. We might not find ourselves not working for the right company anymore. We might find ourselves not making the right decision anymore because we did not know how to adapt faster to a rapidly changing economic environment. And that is COVID. Now, when we're looking at the technology, and this is basically, I'm going to take 10 minutes to talk about the technology that we see at our crowd, the changes in technology that are going to be fueling that economy of the future. What we're seeing is basically two main themes. The first one is related to tech adoption. Now, even before COVID, tech adoption has never been faster. If you're looking at this slide, it basically shows the tech adoption in the US households for the last 120 years. You can see that it took Americans 50 years to adopt electricity in their homes. It took them less than 10 to adopt a smartphone. Now, this was before COVID. What's happening now is an acceleration of tech adoption never before seen in the history of mankind. And there's many indicators. If it's Amazon that's hiring 100,000 employees, if it's Ocado, for example, it's an online UK supermarket that has basically now introduced virtual queues. You had to wait for 2 hours before you could log into the website and do your grocery shopping. Now you may say that for every technology company that has been lucky during COVID, there's plenty others that haven't, like Airbnb or Uber, and you of course you're right, but there's few key elements that are making this a completely different story. So COVID, for the first time, is reaching the technology, the tech adoption is reaching new demographics like the elderly, and it's changing consumer behaviors like never before. Just a quick recap. In the UK, for the first time in 700 years, members of parliament can vote online. In New York, you know this better than me, you can get married via Zoom. In Israel, for the first time, the police is allowing citizens to file complaints online. We're all working from home and it's working extremely well. And all these surveys are saying that productivity has actually improved to the extent that the CEO of Morgan Stanley says we don't need as much real estate. And the CEO of Barclays says the crowded offices will be a thing of the past. And indeed, when all those office leases expire in the next few years, we're gonna wake up into a completely different office experience that the business collaboration would radically change once the humanity realized that you can also work from home and be quite productive. I'm not even talking about telemedicine that is up the roof. I'm not talking about online grocery that is up the roof. The CEO of Microsoft has put it in the best words possible. We've seen 2 years worth of digital transformation in just 2 months. And does this reverse? Will tech adoption ever go back? Never. Not a single time in human history has tech adoption reversed. And if I had to put what's happening right now qualitatively on this graph, it would have been a straight line up, the digitization of everything that hasn't been digital. So first trend is increased tech adoption. The second trend is automation. Automation is the process by which machines are replacing humans. And we intuitively think about this process as a straight line. Every year, there's more machines that are replacing more humans. And that is essentially a mistake, because all the research shows that automation happens in bursts, in spikes, and they're centered around economic crisis. And this is because at time of economic crisis, the relative cost of labor goes up because company revenues go down. And what do? They simply lay off employees. Now, which employees are losing their jobs right now? In the past and definitely right now. So the vast majority of employees that are losing their job are low-income employees that perform routine jobs that can be easily automated. And those jobs are simply replaced in the past, but also now, by a mix of technology and highly skilled workers. We can see in 2008, following that recession, there's been a spike in the requirement on the demand for employees that are well educated with good computer skills and better education. And you know, this is the mind-blowing slide. You know, it shows the automation potential of the U.S. market, and this is from the Brookings Institution, but the same data we can find in PwC and McKinsey. The automation potential of the U.S. market is double-digit, and if we're looking at the industry that is most susceptible to automation, these are exactly the people that have lost their jobs right now in hotels and restaurants. But there's one thing that is radically different in this recession, I would say depression, it's already a depression compared to all others. And this is called AI. For the first time in our history, we have a technology that can replace humans, not just in manual labor like in the past, but also in cognitive skills. They can replace insurance agents, they can replace radiologists in hospitals. And AI, especially in this economy, will have a dramatic impact on the workforce. It's a challenging time for people in public policy, you know, because there's a growing digital divide in the workforce that has to be bridged. If you're in technology, if you're in startup, this is a very exciting times, and we expect the next 5 years are gonna be, you know, the advancement of humanity brought by AI would be dramatic. Now, very, very quickly, we've seen that in the good times, tech has transformed entire economies. If we look at the top 10 publicly traded companies in 2010, it's only 2. The last I checked, in 2020 in Q2, we're talking about 7. Now keep that slide in mind because I'm gonna get back to it in a second. So in our crowd, the way we look at the post-COVID reality is basically twofold. There's with industries that will be accelerated, meaning there is existing technology on the shelf that simply needs to be adopted, versus other industry that we need to be transformed, meaning that there is no existing technology or the technology need to be repurposed from another sector. That, for example, air travel, it's a clear example of an industry that needs to be transformed from biosecurity, from regular airport security to biosecurity. Now, why am I telling you all this? Because the solution to growth post-COVID is called disruptive innovation. And when we think of what's disruptive innovation, it's easy to think about incremental innovation. This type of innovation, you had a 3-blade razor, now it's 5-blade razor. Disruptive innovation basically is the introduction of a new product to market that renders all previous products obsolete. For example, what Netflix did to the DVD, what Spotify did to the CD. Now, if we're looking at the companies that have brought most of the disruptive innovation to the world in the last 30 years, Amazon that disrupted the bookstore and so many other things, Google that disrupted advertising, Facebook that disrupted advertising, etc., etc., etc. These were startups just like 28 years ago on average. Just 28 years ago, and they became the market leaders in less than 10 years. So when we're looking at what's happening right now, when Warren Buffett is, for example, selling all of his stock in airlines, taking a huge hit, believe it or not, and I'm sure you believe it, the big tech companies are crushing it. The reports Q2, Q1 are simply off the charts. How come? How is it possible that the economy is going south and the big tech is doing so well? And that is because the only real vaccine to COVID is technology. And I'm not talking just about the real vaccine, the medical vaccine to the disease. The technology would also save us there. I'm talking about technology that will simply sustain our economy. And what do we need to sustain our economy? We need remote software to work from home, like this one, that is cheap and available. We need good software to send our children to school. We need the proper internet speed. We need some good Netflix at home, right? Can you imagine what happened if COVID were to strike in 2008? Can you imagine what if COVID were to strike in 1991? We didn't even have the internet back then. There's only 2 options, right? You would either be forced to stay home and starve, so probably not an option, or forced to go and work and pay an even bigger toll in human lives. So McKinsey, and that is my last slide, my last spiel about what's happening right now in the economy. McKinsey is saying that history suggests that corporations that invest in innovation and that is true for anyone that invests in innovation, during crisis outperform the competition during recovery by up to 30%. Because those who are prepared for the new reality, those who are prepared for for the changes in the economy early, are much better positioned for success. So that was a high level about what's happening in the economy. Now let's talk about, if we talk about disruptive technologies, let's talk about disruptive technologies in food. And I'd like to welcome to the screen Tom Mastrobuoni. He is the Chief Investment Officer of Big Idea Ventures and formerly the CEO and the founding partner of Tyson Ventures. And David Rabie, the CEO of Tovala. And of course, we'd like also to welcome you. So let's start by running a quick poll. Quickly choose how COVID has impacted your, food, your eating habits. Are you ordering more food deliveries? Are you cooking at home? Are you ordering takeaway? Are you eating out more? So let's give you a few seconds to fill up this quick poll, and let's see the results. Okay, so the vast majority of you, about 80%, said that you're cooking more at home. Okay, so that was an easy question. Now let's go for the tough question, okay? How has your weight changed during COVID times? Are you huge? Are you just gain a little bit of weight like myself? Have you lost weight? I know some people who actually did, or everything is fine with you. So let's take a quick moment to answer this and see. Okay, interesting. So most of you gained some weight, or actually it's pretty well evenly distributed. So it's definitely good news for everyone. You're all eating healthy. That's probably why you joined this webinar. Okay, so I'd like to introduce you. Start with some fun facts about Tovala. Okay, it's a food tech company that does something that sounds quite surreal. Okay, it's meals that cook themselves with the help of a smart oven that does all the work for you. Okay, it's a food tech company that has quadrupled its sales since September, in part thanks to COVID, quadrupled its sales. And it's a food tech company that has showed a retention that is 3 to 5 times higher than the competition. So David, please introduce yourself. Tell us a little bit about how this happened.
So Tavala was built on a simple problem that I'm sure everyone here can empathize with. The idea that time is the most precious resource we have, and yet you never seem to have enough of it. The mission of the company is to give people that time back by reinventing home cooking. So what does that mean? You take the best elements of a home cooked meal, the raw ingredients that you see here, raw salmon, green beans, lemon, slivered almonds. You take away the worst parts. So when you don't have time, no preparation, no cleanup, and your home still smells nice. Your food comes out super hot. You get great texture. So on this meal, your sauce will caramelize. It's as though you have a chef in your home, but you don't have to do any work. So there's none of the prep, none of the cooking, none of the cleaning. That's what we offer. That's what's unique about our business. And that's why we sit at the intersection of high quality and high convenience. And if you look at the landscape, you can get food that's high quality, but generally you have to work for it. Or you can get food that's very convenient, but you compromise on quality. We're able to sit at this intersection of high quality and high convenience because we control the full end-to-end experience. So from the beginning, we built a food company, a software company, and a hardware company, all under one roof, all together. What does that translate to from a business standpoint? Strong retention. So Dan alluded to this. Our 1-year retention is 3 to 5 times better than anyone else doing meal delivery, whether that's a meal kit or prepared food. The fact is we're solving a massive problem in this country of I'm tired and busy on an average weeknight, but I still want a high quality meal. We're solving that in a way that no one else really has. And that retention over time really starts to flatline. So you see as customers build a sticky habit with the service, it becomes something that is part of their lives, becomes habitual. And that retention has improved over time. So as we've introduced new products on the oven side and the food side, that retention has gradually improved. Dan alluded to this as well. The other piece that has really taken off since September is our dramatic growth. So the business was growing relatively stably for the first couple years, and then we went through a big rebrand. We changed our pricing a little bit, and by September, things took off. So even between September and December, the business about 2.5x. So a lot of this growth came and happened before COVID. There were fundamental changes that were in place. And then when COVID came, it was an accelerant for us. So all of these behavioral trends that we believe were coming anyway have come a lot faster. And so the growth has really continued in a very dramatic way over the course of this year. And again, the projections for this year are to triple the size of the business again. So really, really strong growth coming for us. Just real quick about the team, wide breadth of talent and experience because it is a complicated business. So people from the food industry, appliance industry, Nick, it was the former CEO of Keurig, which is one of the closest businesses to us in terms of comparables. And then we'll just close with a quote here from an actual customer of ours. Mike said that if Tavala stopped existing, it would probably have as much an impact in my life as if Uber were to go away. We've built what is truly a very differentiated product, solving a really big problem in a unique way, and it's resonating with our customers.
David, I'm not sure if I fully understand I fully understand. I'm not sure if everyone fully understands the product. Can you describe what exactly Tovala does from a customer perspective?
Sure.
I'm going home, I'm hungry, what's next?
Yeah, so you put this countertop oven on your counter. It works like a toaster oven, so you can toast bread, you can bake cookies, you can do anything you would in a normal oven. There's also an app that you can use. So that's the first part. Then you get your meals delivered to you once a week. They arrive fresh, not frozen. Ingredients are mostly raw. And when you want to cook them, you take them out. There's a box that has every component you need for that meal. You add a sauce, you stir a couple things, put it in your oven, scan a barcode that comes with every meal. That downloads the cooking instructions from the cloud. The meal cooks automatically in 20 minutes or less. The meal uses all the functions of the oven. So the way you would at home, maybe use 2 or 3 appliances to make dinner. The oven does that automatically for you. And then you get a push notification when dinner's ready. Eat your food, recycle your tins, voila, you're done.
So I'm home hungry. All I have to do is go to my Tovala oven, take out the food I have from the fridge, which is raw, scan a barcode, right, on the oven itself, insert the tray inside, and the oven just cooks it for me. I don't have to worry about the things. This is basically the product.
That's exactly right. Your home smells nice. It's like you cooked yourself, but you don't have to do any work.
Okay, so David, I'm going to ask you a question, and I want your full honesty. Okay, how many investors, VCs that you've met in the past, in the far past, I'm telling you, I'm asking, have told you, David, keep dreaming and get the hell out of my office?
Most investors are not that blunt here in the US, but in different words,
they are yeah.
500, 1,000. I mean, countless numbers of investors, especially our first 2 to 3 years. Everybody said, this is a great idea, but way too complicated. You're trying to build a hardware business, which is hard enough. Most hardware fails. You want that hardware to be internet connected. So you have to be really good at building software and firmware. Oh, and by the way, you also want to start a food company. You want to do recipe development. You want to do food production. You want to do packaging. You want to do all those things under one roof with relatively limited amount of capital. This idea, if it happened, would be amazing, but way too hard to get this business off the ground and then operational. So we heard that for about 3 years. And then we did it. We got the business off the ground middle of 2017. We ran it and it was working. And then the meal kit industry blew up. Blue Apron went public. And all of a sudden, most VCs started to pull away from food delivery. It was like, a lot of money has been lost. We don't want to touch anything in this space. We don't care how differentiated this business is. We're going to put our money elsewhere. Mm-hmm. But there were some investors, clearly, and we'll talk about Tom here. And then it took us a while to find product market fit, as you can see on that growth chart. So we had really strong retention. We had good growth, not amazing growth. And then we found it. We found product market fit, and overnight the business exploded. This was September of last year. And it has not stopped for the last 11 months, basically. And so
we will get there in just a moment. What I'd like to, it was a great segue for Tom, and Tom at the time worked for the venture arm of one of the largest food corporations of the world. Tom, would you, and by the way, Tom was an early investor. Tyson Foods was an early investor in Tovala. Tom, would you mind tell us a little bit about yourself and what, you know, why did a young startup that just came up with a big dream in a very complicated business, why did you invest?
Yeah, sure. Thanks, Dan. And David, good to see you again, man. You know, my job at Tyson was to make our core business uncomfortable. That's what our CEO told us he wanted us to do. And as you pointed out, we're the largest food company in the US at the time, third largest protein producer globally. So poking that bear in the eye was sometimes a dangerous proposition. But what when we came across David and his team, we saw a couple things. First, we saw it was addressing a problem with that exploding meal kit market, which was, that was a business built primarily by tech entrepreneurs and bankers because they had an idea. What they didn't understand was they were creating a business that really wasn't solving a problem, right? And in venture, we have this term called vaporware, which is software looking for a problem to solve. Mm-hmm. We very much more preferred a solution to a problem that we all had, which was, as David pointed out, convenience was number one. So meal kits were built to solve convenience. They really didn't do that, right? Getting a box of raw produce that I now have to prep and slice and wash, et cetera, that's not solving, that's packaging the problem in a different box. What we saw with Tavala was a true solution to the convenience challenge in the meal prep space. When you talk to consumers, what they want, taste, 1, 2, and 3. Product has to taste good. So what did we do? We went to to David's first office, which I think was in an industrial parking lot or storage. I can't even remember where it was. I felt like I was at a U-Haul storage facility. We actually got lost getting there. We were late for the meeting. But we showed up and they fed us and the food was tremendous. I always remember I had the miso salmon with rice and broccoli. And I was like, you guys cook this in the same oven at the same time? He's like, yeah. I'm like, no, it doesn't work that way. You got to boil the broccoli and you got to broil the salmon and the rice is a whole different thing. He goes, no, man, it's in one box. And it just blew us away that the food could taste as good as it did, not microwaved, but actually baked, broiled, steamed, and taste delicious. So we looked at it and said, convenience, check, right? Flavor and taste, check. And then it was all the challenges David talked about. And you know, David didn't see all the sausage making that we did at Tyson when we talked about this deal, but you know, we talked about the hardware, right? Hardware is a hard business to do. And what's the margin look like on that? And where does the product get made? And how do we source that efficiently? We know building a food business and how hard that is, that supply chain. How do you secure that? How do you have recipe continuity and quality of product and food safety, quality assurance throughout the life? And you know, we dug into the business and David assembled a great team. All the questions we had, they were sort of like, yep, check, done that. And so it was not a traditional deal for us in that we would source a deal, we would talk about it, we get a business unit person to sponsor it, and then we get it approved, and legal does its thing. This was a very quick sort of, almost, we talk about these aha moments that you have, and it really, we were sitting in the boardroom in Springdale, Arkansas, and our CEO, Tom Hayes at the time said, let's just do it. We're like, okay, like I don't have a deck, I don't have a model, like that's fine, let's just go do it. Not every deal went that way, trust me. I'd have much less gray hair if it did, but it was a fun deal to work on. Because all the things we talked about, the retention rates, the stickiness, David talked about it in his piece about, you know, what, and Dan, you want to know what makes an interesting food tech deal? It's that gooey factor, that stickiness, that if it's a piece of software for manufacturing, or if it's a food safety application, or if it's a direct consumer model, right? You want that high, it's not a great term, but a high gooey factor, right? It's hard to rip that out once it gets implemented. And consumers really tough to do that, because you talk to people I'll talk to groups and say, how many people tried Blue Apron? How many people? And people tried all of them because there's no brand loyalty, right? It's all about a race to the bottom. It's all about coupon shopping for that business model. This is different, right? This is very much a community, and David will probably talk about it, but the community of recipes they're building and users, it's a completely different business than we even thought it would be, 3 years ago.
And Tom, when you assess an investment in a food tech company, what are you looking at? What are the key metrics? What makes a good food tech investment? And by the way, I'd like to ask the audience, please type your own ideas in the chat. What, in your opinion, makes a good food tech investment? Remember, you're here to participate. We're going to acknowledge what you write on the chat. Please, Tom, go ahead.
Yeah, so for me, it goes back to solving a problem, right? We need to address whether, we see businesses that address language communication issues, right? And I go back to Tyson, we had one plant where 43 different languages were spoken in the same facility on the same shift. So when you talk about safety of team members in a facility running these massive machines, handing out new manuals and having to have it printed in 43 different languages, and then dealing with the literacy challenge of some of the team members, it's a huge problem that technology can help solve. When you look at the rapid nature of food safety testing, when you look at direct and targeted marketing, right? MAP spending, marketing and promotion spend for a food company, it's a massive line item on the P&L. Right? And you can either do it extremely well or you can do it extremely poorly. And when it's not applied properly, it will be a cost center for you as opposed to a revenue driver. So when we look at direct-to-consumer businesses, we immediately look at the cost, the customer acquisition cost versus the LTV, the lifetime value of the customer. And a good rule of thumb for us is 4 to 1. If you can't make $4 from every customer for every dollar that you spend to acquire that customer, the stats aren't favorable for you to be a successful business. So we focus, it doesn't have to be 4 to 1 at the outset, right? These are startup companies. They're not going to be there. But what we want to understand is that the team has a vision for how are you going to get to that point, right? I'll say, what's your LTV to CAC ratio? Oh, if they say, I don't know, that's a problem. If they say it's, 1.5 to 1, I'll say, okay, where do you want it to be? And if they say, 2 to 1 will be good, okay, that's a problem. Or they say, we want it to be, 8 to 1 or 7 to 1. We want to leverage the virality of sharing in social and really leverage those channels. Then that gets exciting. But it's really, any VC will tell you, it's team and TAM, total addressable market. If I have a rock star team and a huge total addressable market, chances are they're going to do pretty darn well.
So let me share with you what people are writing in the chat. And again, I'm not sure if my chat view is whatever everyone sees, but there's a lot of activity on the chat. And we're asking one question from the audience, what is your idea of a good investment in a food tech startup? And he says, basically a sustainable business model. Gadi says, when there is a real science-backed health benefits, not just a gimmick, meaning it's really good for you when you want your kids to consume it. So there's plenty of questions here. I want to open it up for Q&A. But before that, David, I want to ask you one question, maybe very, very quickly. Tell us what happened in September. What was this point by which you started growing like crazy? 4 times the revenue. Tell us what happened in September last year, and of course how COVID played out in the middle. We want to open the stage for Q&A.
Sure. So I would rewind to the beginning of 2019, and we took a look at our business and said, okay, we've got a really unique product, so we don't struggle to get people to our website. It's an interesting offering. And once people buy, they're really sticky. But the middle part of the journey, I'm interested in Tavala, I'm not sure if I should buy or not, that's where we were losing too many customers. And so we went and spent a ton of time interviewing our best customers, and then also interviewing people that were not willing to make that leap to understand why. And we took all of those insights and rebuilt the brand from the ground up. And that new brand rolled out over the course of August and September, new messaging, completely new website, really this emphasis on time savings above everything else, which allowed people to wrap their heads around how this thing works. Because there's so many pieces to it, it's hard to understand. And so we relaunched the website, conversion rates started to go up really dramatically. and then we changed our pricing structure ever so subtly. It wasn't a huge change. Between those two things, conversion rate on our website more than doubled. And so that made a huge difference. Economics changed entirely and allowed us to start to scale our spend. And those are fundamental changes. So the conversion rate on our website is held, which is why when we look ahead, we say, okay, great. By the end of this year, we're going to be 3x again. And by the end of next year, it's probably going to happen again. So the growth prospects of this business are through the roof, and the retention is held. So you have this fundamental base that's so strong with rapid growth that's fueled even stronger by COVID.
So I've been in the food business my whole life, mainly in food service, procurement. I've run restaurants, I've run distribution centers, and the logistics involved procuring fresh product safely, processing it or prepping it, packaging it, and shipping it fresh all over the country has got to be very difficult and expensive. So, and knowing the margins in the food industry, how can you possibly make money doing this?
Yeah, I'd say the simple answer is that we're shipping on average about 5.5 meals to each customer each week. So you can lump in all the shipping costs and packaging costs and spread it out. If this was like a restaurant where people were ordering once a week and getting their food in California from Chicago, it wouldn't work. But with people spending $65 a week on average, it's a really healthy margin business at scale. Like our margins now are solid, and at scale, they'll be really good. So to oversimplify, that's how the economics work and why this business model makes sense.
Okay, I had some Tavala questions I had posted, but I'll read them. Is the profit for you in your ovens, or is it in the food? And if it's in the food, then is this an IBM Microsoft issue where you should just be giving away the ovens in order to sell the food? And my follow-up question to that was, if are third parties allowed to produce product which is compatible, similar to K-Cup manufacturers now? And if not, is there a plan in the future? Where's the profit? That's it. Thank you.
Sure. So yeah, today the business model really centers around making our money on the food. The oven is the vehicle to get into the home. We've experimented with giving away the oven. There's a whole bunch of implications of doing that. The largest of which is totally changes the qualification up front for our customers and the brand perception. So we actually think charging some money for the oven is a good idea. One of the main reasons is that the oven also has a lot of value on its own. So whereas a Keurig machine really only works with the Keurig pods, our oven does a whole bunch of things outside of Tavala meals. And so there's some small percentage of customers that buy it just for the oven. And we don't want to lose that necessarily. And then in terms of your question around third party, today we allow frozen food manufacturers to basically their food cooks automatically in our oven just by scanning the UPC code. So take a Trader Joe's frozen pizza, you buy it at Trader Joe's, come home, scan the UPC code. Our R&D team has figured out the best way to cook that pizza automatically, and voila, you don't have to do any work. So for us, it really enhances the usage of the oven, things that you can do with it, and it allows us to borrow credibility from other well-established brands. But the brands that we allow onto the platform have a very different type of product than what we sell. So it's frozen food, different usage occasion, different quality. And so doesn't cannibalize our core offering at all. It really just accentuates it.
Yeah, and Frank, I just want to join in on that. When we first met the company, and you ask my partner Reese from Tyson, he'll tell you, we left the meeting, I go, you should just give the oven away for free. Like this is a razor blade model. Why aren't you just giving it away for free? And David told me I was wrong, and he was right. I was wrong. The oven does create value in the customer beyond just the upfront sale.
I was curious about that application and how you see it scaling with companies like Tyson in terms of the quality of preparation of their frozen products, or other CPG companies, and what kind of impact do you see that having on their business and ease of preparation to make that a more adoptable solution for consumers?
So the way we look at this feature, we call it Scan to Cook Groceries, is right now it's a very small part of what we do. We're not monetizing it. You know, like I said, it helps give us credibility, make the oven more useful. And for these other brands, it's a nice way for them to highlight the versatility of their product. I think this conversation changes at a certain scale when we have a huge number of ovens spread across the country. Then all of a sudden, you know, we have a lot more power in pushing certain products, in you know, bringing really powerful data forward. And so for now, I'd say the focus is very much on our core business, which is working super well. You know, we believe is playing in a huge market, and we've got a very clear path to growth. So that's where 98% of our attention is, 99% of our attention. And we think once we hit certain scale, some of the things that we've built with this platform will really get unlocked and open up new opportunities for us.
I actually think my question was mostly addressed, and I was wondering what the value in the appliance is aside from the meals, as a standalone, you know, product to eliminate other countertop appliances and its usefulness without the meal. But I think it was mostly addressed in the prior question, but feel free.
Yeah, simply, you know, it replaces any toaster oven one for one. It replaces toasters. It's great at reheating food. And what's interesting, I touched on this, but because the ovens are Wi-Fi enabled, we're able to capture all of this data. So we know what people are doing with their ovens. We know what usage looks like. We know how usage changes over time. We know what people are cooking. And people use the oven for all kinds of different things. It's not just for Tavala meals. And you take all that usage, it's practically people use their ovens every day over the course of an average month.
So we keep getting questions, and I encourage you to keep sending them. Some questions, basically, some people are asking, how, as a retail investor, as an individual investor, how can I invest in Tovala? You can just simply log on to ourcrowd.com, sign up as an investor, and invest directly. The minimum ticket to invest in our crowd is $10,000. Another question is about the market. Anna is asking, is it only for the US market or about other markets?
Yeah, for right now, we're just focused on the continental US. And I'd say we think the market here is so big that, you know, to build a multi-billion-dollar company, we don't need to go global. That being said, we think the model translates pretty well to some other countries, and HelloFresh is a global company and seen a fair amount of success in other countries. So at some point in the future, it's something we would probably entertain. But for now, we think there's a lot of growth ahead of us in the US.
So Todd is asking, what's the range of recipes? Are there vegan options? Some questions we got are about kosher, halal. What about those type?
Yeah, so right now on average, there's about 15 different items on the menu every week. Menu changes on a weekly basis. We try to have 2 to 3 vegetarian options every week. There's several low carb options. There's several low calorie options, and then a really nice mix of flavors and protein types. But we don't accommodate kosher or halal yet. We don't have, you know, regular vegan items on the menu. And this will grow over time. We've always talked about Tavala as a platform for automated home cooking. And so you could see how this would evolve and over time cater to different diets.
It's a great question, a great segue to a question. Are you working on other cooking or food storing devices like a smart fridge, oven, etc.?
We're not working on anything dramatically different than what we're doing today. You know, I come back to this idea of we have product market fit with what we believe is a very defensible business in a huge market. And so it is a game of focus and execution. And there's a lot of growth ahead of us with what we're doing now. And, you know, I think there's a lot of temptation to go do a lot of other things and different things. And my job as CEO is to make sure we stay focused because we've built something special, and it's just about continuing to build on it.
So we actually have on the chat, it's not really a question, but it's a testimonial from a customer and an investor. He's saying, I was a seed stage investor in Tovala, and shortly after I bought the oven, and I've been a consistent customer for years. Weekly meals, because of my use for others in my circle, family and friends. I've also bought the oven and regular order meals. I've tried numerous other companies in meal delivery and nothing compares. Is that really the case?
Yeah, I did I saw a pitch many years ago, saw the deck. I've tried numerous meal companies before that. I've had food delivered. The meals were inconsistent, not very good. They were reheated. Sometimes they'd be okay. The price point wasn't compelling enough. They were convenient, but the quality wasn't there and the freshness wasn't there. And then the delivering groceries to my house for me to make a meal on my own certainly didn't work. It didn't have the convenience factor. So to me, it was a missing mark. I lived in the Bay Area. I lived in San Diego. I probably tried 6 to 8 of those delivery companies, and it was very frustrating. Saw the pitch for Tavala. I said, wow, that's a tough business. I invested, waited for the Gen 2 oven to come out, purchased it, and fell in love with the meals. I've probably been ordering weekly meals for 2.5 years now, or 2 years, and 4 others in my circle just saw the oven and said, wow, that's cool, or saw me making a meal and said, that looked good, and gave one to my neighbors a year ago. They have one now, and I see their box show up whenever my box shows up. So it's just been really fun to watch them solve a clear problem.
Tom, to you, what else is interesting, and what else should people watch in the food tech sector? What are you looking at?
Yeah, absolutely. So we're looking at a lot at packaging right now. There's some really interesting innovations happening in that space. Starting with what we think one of the biggest problems in the U.S. market are those EPS styrofoam meat trays that we all know and hate so much here in the U.S. And although they are recyclable 9 times out of 10, I know I'm guilty of it. I just take my protein out and just dump it. I don't want to deal with the liquid. The purge is what we call it in the industry that's still in the tray. If you believe it, we call that thing the diaper that's in there that absorbs the liquid. So we just throw that out. They are recyclable. Some municipalities can handle them, some can't. 97% of them end up in either a landfill or in the ocean, where turtles eat them and unfortunately think of them as food. So we're looking at some companies that are trying to address that, removing single-use plastics, but in a way that doesn't create another problem, right? Famously, Starbucks said, we're going to get rid of plastic straws, so we're going to do paper straws. And the paper straws were given to you wrapped in plastic. And I showed the guy, the barista, like, this is a different problem. This isn't solving any problem. You just move the problem from one place to another. So packaging is definitely important. And transportation too, how we move food throughout the supply chain. Right? And I think one of the attendees was mentioning his experience in the food industry. In the U.S., well over 90% of food is moved by truck over the road. It's a very unsustainable way of moving product. So what can we look at in terms of cooling technologies or transportation technologies that can limit the impact on the environment from a sustainability perspective and move things more efficiently through the system?
So, we at our crowd, we invested in several companies that are, quite successful today. We all heard about Beyond Meat. It's probably one of our best investments. We invested in Ripple, the dairy alternative, and in Blue Nalu, that they basically create lab-grown fish protein. What do you think about that area of food tech?
Yeah, so Cellbait, I was in San Diego when Lou and Chris were signing their incorporation documents for Blue Nalu, so I've literally known them from day one. Fascinating business. I think we all, if you spend any time in the food investing space and have looked at cell-based protein, you know the cost challenges there as well as the technological challenges. I think why Lou and his team are really well positioned is fish tissue naturally grows 2-dimensionally, layers, right, on top of each other. So the technology they're using to build their cell protein very much mimics what happens in nature. When you look at terrestrial proteins, beef, poultry, etc., those grow 3-dimensionally, which is why scaffolding is such a challenge in that space. So companies, again, for us, brands are not that, at Big Idea Ventures, brands are not as interesting for the group that I run. We're looking more at the systems. So I'll take a step back up in the supply chain and say, I want to invest in the companies that are working on texturizing, flavorings, scaffolding, those industries and businesses that are going to serve the alt protein space. Because then I don't have single brand risk. So I'm not a brand guy. They're fun to do, don't get me wrong, And when they go right, they're awesome, as you guys saw with Beyond and Ethan and his team. When they go wrong, though, they can go real wrong. So you want to limit that exposure as much as you can.
So I'm mindful of our time. We have exactly 4 minutes left, and nobody is asking about COVID. How COVID is impacting specifically your business, Tom, from your perspective, how COVID is impacting, and David, from your perspective. So maybe 2 minutes each, so we can finish exactly on time.
Perfect.
David, let's start with. No, actually, Tom, let's start with you.
Sure. So I have two businesses. First is investing and second is fundraising. And both have been challenged due to COVID. So we've pivoted a bit ourselves, right? We tell our entrepreneurs you have to be able to pivot. So we said, let's eat our own cooking and let's pivot ourselves. So we, instead of trying to raise a blind pool of capital, we're working on standalone investment opportunities. Find a strategic to anchor a syndicate, bring some family office capital around it, and go execute that way. On the deal sourcing side, the pipeline remains strong, right? There's a lot of folks raising capital right now. There's a lot of convertible debt being raised. I think that's due to valuation uncertainty due to COVID. We don't really know what's a temporal impact, what's a permanent impact on the valuation. So a lot of debt being raised. We're still seeing big equity rounds, right? I mean, Oatly raised a huge round. Memphis, just before COVID hit in the States, closed their monster round. Benson Hill is running a monster round. So there's capital to be, and there's capital to be deployed. There's dry powder. So it's a really weird time, but we're active for sure.
It is a weird time. David, the impact of COVID on the food business, especially yours. What do you see?
It's added another layer of complexity to what we do, and I think the first 1 to 2 months, there was a lot of uncertainty around what we should be doing in our food facility to maintain safety and quality. And, to the extent at all possible, we have achieved some sense of normalcy with how we do things, but there is a base layer of stress of operating in a facility during COVID that will not go away until this pandemic is over. So it just makes things more complicated. I'd say also on the food cost side, we've seen some increases because you've got processing facilities that have been shut down. You've got shipping carriers that are overwhelmed with demand and an inability to hire fast enough. So some impact there. And then on the growth and demand side, just extraordinary amounts of demand for what we're doing. And, there have been many, many weeks over the last 6 months where we've curbed demand just to ensure that we can fulfill our meals safely and maintain quality, which is a great problem to have. And I think it's, like I said, a lot of people that we believe would have been Tavala customers, but it might have taken them 2, 3, 4 years to discover that this was the right solution for them, getting there a lot sooner. So we're fortunate that all in all, it has been really good for our business. So
David, last question for you, and we have exactly 20 seconds, okay? So try to answer this in 20 seconds. It's a big answer. It's a big question. We are in the business of dreaming. I've been an entrepreneur myself. You are quite a successful entrepreneur right now, and you have been able to realize your dream to a certain extent. The company is doing very, very well. What's the next dream? Where are you taking Tavala?
To me, we're in, to use a baseball analogy, we're in the second inning of a 9-inning game. So we've proven some things, but I think there's so much more to be done with this business. This should be a business that is many, many, many multiple times bigger than what we're doing today, and that really builds on the platform that we've put together.
Perfect. Tom, David, thank you very, very much.